the best time to buy is when nobody else wants to buy.
Yeah.
The best time to buy is when the news cycle is negative. The best time to buy is when you're on Twitter and it's doom scrolling everywhere you look. That is the best time to buy. You don't force it.
Okay, so tell me about what's going on in the housing market. Stop touching the fucking mic.
Same answer as last week, man. It's seasonality combined with rate hikes. It's the perfect storm for a slowdown. But not dead, right? There's still activity and there's still multiple offers, and some properties are getting 15 offers still.
So I called you the other day, or I called you, and then you obviously sent me a text back because that's what I was looking for. I was looking for a text back instead of a call. You know what I mean?
Yeah, I'm busy during the day. Man. What do you want me to do?
And you said you have multiple listings, nothing selling. Or what did you say?
So I've got a handful.
There you go, touching the fucking mic.
A handful of listings right now that I'm just gonna ignore you that that aren't selling, but there are specifically like a couple tenanted properties that's creating issues. We're not able to get the showings in there as often as possible.
So they're giving you a hard time, the tenants?
They're okay, but it's just tough, right? Yeah. Somebody wants to show last minute, they don't give 24 hours notice. Hey, can you guys make it work? No, we can't. Okay, we got to reschedule them. It just makes it more difficult. The property doesn't show as well as it could if it was vacant. It's a little bit more messy, whatever, right? They don't care how it shows. Some properties, sellers still have expectations that are from the peak of the market for this cycle, right? Which peaked, a month and a half or so ago.
And what are you seeing now?
It's just
percentage-wise,
it comes off its peak, right? So percentage-wise, it's tough to say because the data is kind of lagging. Mm-hmm. But 20-30K off of its peak prices. So
like 5%, maybe 10.
Yeah,
maybe not even 10.
Depending on the sale price, I don't think it's 10, but
a little bit.
Yeah.
Okay.
Yeah, so it's kind of like, hey, I was running comps on these properties a month ago, and that was the peak for this cycle, and now the expectations were set at X, but they're actually now Y. And so it's just an ever-changing market. But again, right, like it's...
Did that rate hike have anything to do with it, you think?
It sure as hell doesn't help.
Yeah.
It takes a while for the rate hike to cycle through.
Yeah.
Because everybody's pre-approved that's shopping right now. It does hit sentiment as well, which you can't really quantify that.
Yeah.
But I've got buyers right now that are actually saying, oh, shoot, I want to get something before September. My locked-in pre-approval expires in September. So that actually puts a little pressure on them.
Interesting.
But, for anybody that's entering the market now, you're going to get qualified. Well, it's another quarter point higher of a qualification rate. And that's now approaching...
Now, for these people that have the pre-approval, is the pre-approval factoring the quarter point hike as well? Or are they locked in? They're locked in, right?
For 4 to 6 months typically.
Yeah.
So if anything, it's the opposite.
Yeah.
I'm locked in at 4.75.
Yeah.
The new rate's 5.5.
Yeah.
That's tens of thousands of dollars over 5 years.
Yeah, let's find something.
Yeah, let's find something is kind of the mentality. So
right, interesting. Okay. So something that I'd like to also touch on with respect to the market update is I've seen a few, or I've listened to a few Twitter Spaces, and what I've noticed is, I actually popped in a couple Twitter Spaces about market update with respect to the Bank of Canada interest rate hike, and what I've noticed in those spaces is nobody ever offers suggestions to
it's so true.
You know what I'm talking about?
Just complaining.
Yes. Yeah. They're just complaining, and it's a doomsday sentiment. It's holy fuck, the market's gonna implode. Housing market's gonna implode. It's gonna be catastrophic. Real estate investors are gonna get crunched or crushed. Like what is the advice here for real estate investors regardless of that rate hike? Because like I mentioned, every single fucking thing that I have ever listened to whenever this happens is nonstop. I've never heard anybody in there offer legitimate, good, sound advice. It's simply what it really actually sounds like in these Twitter Spaces is a space with would-be investors and no actual real estate investors. Like that's what it actually sounds like, to be quite honest. And I know there are real estate investors in there in these spaces. I know, unless they're all lying, I don't know, but I can't. it's harder for me to vibe with the sentiment that in these things. Like
I can't vibe with it either.
Yeah,
There's
I can't
no point.
share. Yeah,
no
I don't understand how any of them get anything done.
They don't.
You know,
the quote is complaining about something without offering solutions is simply whining. It's pointless.
Yeah, that's
I
what it sounds like. A bunch of
whining
whining in there.
I just don't have time for it. Now, our advice never changes despite the market conditions. Buy cash flowing properties in great locations and hold them for long periods of time. Like, it just, we've said that 4 years ago. We said it 10 years ago. We're saying it now. We'll say it in 6 months. If the market continues to drop, we'll continue to say it. Obviously, the problem is right now that you can't find cash flowing assets, right?
Yeah.
Somebody messaged me on Twitter the other day. Because I posted something about buy cash flowing assets. He says, well, show me something that fits your criteria that you or one of your clients bought in the last 3 to 6 months. I said, there isn't anything. I'm not saying go out and buy anything. I'm saying you be on the lookout for these opportunities because you want to be, the best time to buy is when nobody else wants to buy.
Yeah.
The best time to buy is when the news cycle is negative. The best time to buy is when you're on Twitter and it's doom scrolling everywhere you look. That is the best time to buy. You don't force it.
Yeah.
And I do, to sum it all up, like I agree, man. I don't have time to sit there and complain about what's happening or to make macro points, right? Pull macro data. Look at this chart. Look at that chart without offering any productive, okay, this chart means this. Here's a way to go take advantage of it. Okay, this chart means this. That means the market's going to bottom in 6 to 12 months. That's the best time to start buying assets. There's nothing actionable other than sell everything and run and hide in fear because the world's ending.
Or wait, and this is when I think you should wait.
It's not wait though. It's never wait and there will be a better time to buy. It's always just the world's ending, don't do anything and you're
I see a lot of people talking about like, oh, you should wait and this is when you should. I'm speculating when it's going to be a really good opportunity to buy.
From qualified people.
What do you mean qualified?
Qualified, like they're investor minded. They,
like define qualified, really, right? I don't know what that term even means because I've seen the dumbest shit come from economics professors on Twitter. I've seen the
qualified. I mean, investors, right? Like you actually own 10 or 20 properties. You've been through the cycles. You own businesses. You're
like, listen, I don't know how to qualify these people. How do you qualify them? By their Twitter bio, like, or by their website? People can lie. I think they're tone qualified. People think I lie. People think I don't. I have tangible stuff. I mean, it's not that difficult to find out that I'm not. But
we follow people that hey, this is their pedigree. This is what they do. This is their business.
Yeah, and the people that what I'm saying is there's it's just I don't know how to. I don't look at that. I don't care who's really saying it. I don't really. There's a couple people who, I follow them based off of the content that they put out that I happen to like because regardless of what you want to call it, maybe I'm biased to their mentality or their mindset, then sure, I guess I'm biased to that because I still like to make moves and I like to make things happen no matter what's going on. And they share the same sentiment, but are they more qualified than Doomsday Guy? I don't know. It's irrelevant to me. I don't really care. I don't really I take everything with a grain of salt anyways.
Qualification for me is you've done it. Right?
Sure,
you've done something. You've achieved some level of
what I'm trying
success.
to say is like it's so hard for me to figure out whether or not they are. I don't know.
Yeah, fair enough. But I think like an investor's tone in any situation or market should be neutral. It's not negative or positive. You're neutral to the situation. You're not emotional. You're not trying to predict the future. You're not thinking that exactly what's going to happen. You have some sort of crystal ball. And what I'm finding is that most of the tone is not really neutral. And if you're not neutral, I'm not going to really listen to you, right?
Yeah.
If you can't see, like, my tone right now is, hey, the market's going to be negative until these rate hikes stop, until the market digests things, and until the market balances out because people aren't selling right now, blah, blah, blah.
Will it really ever not be negative? You know what I mean?
Well, I'm not. What do you mean?
A little less negative, maybe?
I'm not negative or positive. I'm neutral. My tone is neutral, which is, hey, here's the facts of the market. Canada's in a structural supply shortage. That's echoed by Tiff Macklem, which I'm happy to read his most recent. All of the Canadian economists and the Bank of Canada, they're all saying the same thing that we're saying, which is demand for housing is rising faster than the supply of housing. It's been happening for years. We are structurally short housing in this country. Everybody's saying it. A lot of people on Twitter argue that that's not the case, right? They'll say, there's no supply shortage. Well, everybody
or it's manufactured. It's a manufactured shortage based off immigration and stuff like that.
Yeah,
right?
Or speculation and blah blah blah. But
speculative buyers.
Yeah, in reality, everybody's saying that it is. So from a neutral tone, it's this fundamentals of Canadian real estate in terms of supply and demand are very favorable long term. If you're an investor in real estate, or if you own real estate, couple that with the rising population, immigration, the fact that there's targeted 2% inflation compound annually for the rest of our lives. That's just the way the monetary system works.
Minimum.
Very minimum. And that's based on a fiat currency that they're going to continue to print at will. They just keep printing money, sending it over to Ukraine. That's inflationary. The battery plant here is a terrible investment. They're printing money and creating money to make it happen. They're offering incentives. They're giving breaks. That's inflationary.
So everybody knows the average inflationary rate for over the last 50 years, average was like almost 4%. Average.
Yeah.
So
that's CPI too.
Yeah.
So when we look at the fundamentals, the way the money system works, and the fact that we're short housing, you can't print housing, but you can print money. Long-term prices are going to trend higher. Let's call it 2% annually compound until we die. Not every year, but average. That's all I'm saying.
Yeah.
So when the market's going up, you don't want to get caught up in the hype. You want to stick to the fundamentals. If you're concerned about rising rates, you fix your debt. If you're concerned about the fundamentals changing, then you make sure it's cash flow positive. We're not buying for appreciation. We're buying for cash flow. Yeah. And when the market is in a rising rate environment and prices are dropping and there's all this fear, our advice is the exact same. Okay, yeah, rates are rising. Like you always say, you build in increased risk. It's not even necessarily increased risk. It's more increased risk of further rate hikes because we don't have any proper guidance, right? Yeah. It's not necessarily changing the risk
you're hedging
of
risk
real estate.
A little bit. You're
term.
hedging risk of more expenses.
You're hedging the risk of unknown government actions. Not necessarily like we're not saying, oh, real estate's going to crash and go to zero or something like that. Like, oh, we're worried about real estate long term. We're saying the market's shaky right now. The government's not giving us proper guidance. Rate hikes might continue. We have to build that risk in.
Yeah.
So our advice actually is the same, which is neutral.
Yeah.
We're buying a business. We're not buying a macroeconomic prediction 30 years out.
Yeah.
So we get accused all the time of just like pumping real estate or always being positive. I am always positive on long-term cash flowing assets in great locations with rising population growth and fundamentals that are very solid and a supply-demand shortage. Why would I not be positive on that?
It's really weird,
right?
Yeah.
So how do we sum all that up? Like what? You know, how are we still getting into these debates and arguments with?
Well, I think
the bears. So if you want to call it that,
I think that literally the advice is you buy whatever papers according to your investment criteria or your return criteria. That is it. I don't know what. I don't know. I don't even know why these Twitter Spaces go on for like 3 hours. Because
just back and forth.
I don't understand what the purpose of that is. I don't know why people are. I don't understand what they could be talking about for that long. I don't know why. Because like really,
this is so true.
It should only be like a couple minutes where it's like, okay, Bank of Canada increased rates by quarter point, and okay, we're all real estate investors. You know, this is what I think you should do in the market. If your investment criteria is 7% cash on cash return, averaged over the next 5 years, and you want to see an annualized rate of return of 20 to 25%, don't buy anything that doesn't hit that criteria, and the space is over. Like, I don't understand what the fuck, and buy in good locations.
Pretty much.
I don't understand why. I don't understand what the fuck and what are they even talking about. I don't understand why would you even in there waste that amount of time, because like, let's be honest, you could be doing other shit, maybe qualifying deals that come across your desk, because you know, if you look at, it'll take you maybe even now in a good environment, even less of a bearish environment, it would still take you probably 1 in every 100 deals that you come across is a deal that would probably meet your criteria. Maybe in a really hot, like maybe not even a hot market, maybe like a very neutral market, maybe 1 in every 25. Right now, I would expect I would land maybe something that I'm interested in 1 in every 50, 1 in every 100. So like, why are you spending so much time listening to people that are trying to like drive home their negative sentiment and mindset versus you actually doing something where, okay, here's my underwriting criteria for an investment. This is what I simply need to see. Okay, open the floodgates. Let's do all the math. And whatever works, and whatever doesn't, just fucking get rid of it. And that's it. Just move on. So I don't understand like what the, or maybe just I don't know. I don't know what to say. I don't even know what to say
in those
anymore.
Conversations, is there anything actionable?
No, I don't see anything. I have, and I again, in the defense of whoever at that point in time I'm listening to, maybe they don't have an actionable, they don't have something actionable to offer, but I'm not listening to it for fucking 3 hours either, right? So I just kind of pop in there to see, what's going on, or if I can offer my 2 cents or whatever. And then, obviously when I offer my 2 cents, everybody thinks I'm a fucking clown because, I haven't done anything. So
in what regard? Like, what would some of the your 2 cents be, and what would the response be?
Oh, they think I'm like a ridiculous bull or fucking whatever they call you. You know what I'm talking about?
Permeable,
whatever. Yeah, like I'm some kind of shill for the real estate market, and then I'm super biased because I, want people to invest in Coachwood Capital with me, and I don't understand the mindset there. I'm like, okay, well, what's your actionable item here? Like, what's your rebuttal to what I'm saying? And they're like, oh, you got to wait for this. And my focus is waiting on, until all of your investments come to a point where you have to remortgage them and you can't afford them and you just go belly up. And I'm like, okay, well, that's not.
Yeah. So no interest in, like, if this doom and gloom does happen,
all of their actionable items, whenever I say what I have to say, is number 1, met with a prediction, and number 2 is in hopes that the real estate market will go belly up and the investors will go belly up, and that's when they're going to be investing. That's always that's the actionable item, is wait. And how many times have this happened, right? You know how many times I've heard, oh, wait till summer of 2023. Now it's, okay, well, that's not happening in the summer of 2023 now. Oh, well, you got to wait till the fall now. Oh, but that's not going to happen in the fall now. We actually have to extend it out. Now, guys, wait until 2024 comes. That's when I'm going to buy everything. I'm going to buy all your shit when you go bankrupt. It might take a little bit longer. I'm going to buy everything when 2025 comes up.
So
I'm
true,
like,
man.
you guys are fucking ridiculous.
If you were to go back to Twitter from 2021, whenever COVID started, they were probably calling for now 3 years straight for an apocalyptic event where asset prices were going to be at record lows. And what my point is our point is it never comes. It never comes, that perfect opportunity, that
somewhere
perfect
in the middle.
storm. Well, I don't know, in the middle. If it's in the middle, it never came, because they're not calling for.
What I'm saying is like, it's never worst case. It's never best case.
Yeah.
It's never best case. It's somewhere in between those two extrebs. It's never the extreme of each sliding scale.
And that's why you want to remain neutral. Like a best case scenario is usually unlikely, and the worst case scenario is usually unlikely. So it's going to settle somewhere in the middle. That's why you always need to be in the game and looking for those opportunities.
Yeah.